Dow futures rising just moments ago when we got some encouraging headlines, some encouraging comments out of Kevin McCarthy, the Speaker of the House, about the debt ceiling talks. You can see right now futures are down, but only by about 13 points. S&P futures picked up even more. They're up by about 37. NASDAQ got a slight bump up as well to 316 points above fair value. Joining us right now is Megan Horneman, Chief Investment Officer at Verdance Capital Advisors. And Megan, these headlines are the type of things that could have potentially whipsaw the markets. You've got that. You've got the Federal Reserve, the FOMC with their next meeting in just a couple of weeks. What do you tell investors at this point?
Right now, we're pretty cautious on the markets. And when you look at what's going on, this market keeps going higher. It just doesn't make a ton of sense to me. I think that they're focusing on some of this backward-looking data, specifically today's GDP. That was the first quarter. And let's remember that even the banking crisis didn't really take hold until the back end of the first quarter. So as I see these markets go higher on some of this data, I get more and more cautious. We've been reducing our equity exposure several times over the past couple months, and it's hard not to look at this again and maybe even take some more chips off the table.
Even if the debt ceiling's reached, this is just something you're concerned at the levels?
Yeah, the debt ceiling is one thing, but when the debt ceiling does get reached, which we think it will get reached,
or the deal,
there's going to be a
right.
yeah, exactly, the deal. Something will get done. What the market's going to react on isn't the deal itself, but what's in the deal. Remember, in 2011, there was a lot of volatility, and some people pinpoint 2011 and the volatility we saw in the equity market due to the fact that our credit rating was downgraded. But really, in effect, what happened there was the austerity in that bill. That's what caused the market to decline. There's not a ton of austerity in this bill right now. So we're going to be looking closely at what kind of spending, whether it's just caps or if there's actual cuts, that's going to impact the market more. But regardless of the debt ceiling, I don't see a whole lot from economic data that started for the second quarter that makes me very optimistic that we can avoid a recession this year.
What do you think just about the technology part of all of this, the AI story and what's happened overnight with NVIDIA and how that's helping out so many other stocks too?
Yeah, I do think, I mean, obviously AI is a huge part of the evolution of technology, but I also think that you're seeing some euphoria around this and people are kind of grabbing onto this. I don't want to say it's like another .com bubble, but I am cautious that there's been so much euphoria around this and it is driving the NASDAQ higher. We've seen that it's up, I think, probably 25% now today, as of today with NVIDIA's earnings. But remember, the NASDAQ also is very sensitive to interest rates, and we don't think that the rise in interest rates is behind us. There's a lot of data between now and the Fed meeting that the Fed has said they're going to be data dependent. We'll get inflation tomorrow. We'll still get CPI, PPI, and we'll get jobs reports before that June meeting. Right now, we think that they're on pause. We don't see cuts this year. There's a chance that they could raise again. That's going to take some, there's going to be a big headwind to the NASDAQ.
Megan, thank you very much. Megan Horneman.
Thank you.